growth traders. So in this session we will be analyzing what are market cycles, and we will be understanding them in a really simple way so that you can make your trading better. So let's come to it without any further delay. So as you know we have basically three directions in the market, right? So we have an uptrend, which I am drawing. I'm not good at drawing, by the way. So this is an uptrend. What we have here, we have dominance of the buyers here, right? So whenever we are going for a buy trade, right, we are basically interested to buy when it is a nice uptrend, right? So when it comes to an uptrend, we have what? We have higher lows, right? We have higher lows and higher highs, right? So this was uptrend, and I'm sure most of you know about it, right? Coming to consolidation, right? So in this phase, what is basically the characteristic of the price is that the price is basically stuck between two very important levels, right? A support and a resistance, a supply and demand zone basically, and the price hovers around in between these two levels. I hope you are getting it, right? So this is a sideways market, right? We don't have the dominance of any party. I'm talking about the buyers and the sellers, right? We do not have any dominance of either the buyers or the sellers. Hope you are getting it. So this is consolidation. And then we have what? We have downtrend. Again, lower high, lower low, the dominance of the sellers in this case, right? So I'm sure most of you know about it. But what are actually market cycles, right? Let's talk about it. So basically, you must be aware, right, that take the example of a seasonal fruit, right? So in that case, what happens is initially when it comes, it has a huge demand, right? And its price is usually really high. But as the supply increases, what happens is the price decreases, right? The price decreases, it starts decreasing. Again, a phase comes when the supply decreases, right? As the season comes to an end, right? And what happens then? The price starts going up again, right? Getting my point? So this is basically what? This is a market cycle, explained in a really simple way, right? Same is the case in the stock market, right? I am just taking the example of this HSCL, right? So what is happening here? As you know, HSCL, it has given a major rally, as you see here. Now from here again it started correcting, right? And there is a huge correction. To be honest, this is a massive correction. Now as the prices come down, the buyers get back the interest and the sellers start to lose interest, right? So that's what happens, right? Buyers are starting to get interest in the stock because it is available at a lower price, right? And again, sellers are, of course, they have sold it, they are getting less interested, they are getting wiped out in the market, and this leads to the period of consolidation, as you see here, right? So this is what leads to the period of consolidation. Before it, what happens was there was pretty high dominance of the sellers, and as the selling pressure came down, we saw the dominance from the buyers as well, and now we see a consolidation. Price is stuck between two important supply demand zones, right? Now as you see, price shows the first signs of a trend reversal, right? It was an uptrend, it was a downtrend followed by a consolidation. Now it is showing signs of an uptrend. What is the first sign? Higher low, right? And also a higher high. Then comes the nice breakout, the high momentum breakout with a really awesome volume, right? Getting my point? So here what happens is the price breaks the high and then it is retesting as of now, right? Now what we'll be waiting for is again the formation of a higher low, confirming the uptrend here. So hope you are getting my point. See, just have a look on how the price has changed from a downtrend in this region to a consolidation, and now it is slowly coming back to uptrend, giving resulting in the initiation of one more major rally, right? So this is where we can make some investments. right? Although this is a penny stock, of course this is a bit risky, but of course when it comes to some large caps or mid caps and those which stocks whose fundamentals, the stocks with their fundamentals being really good, right? If you are having an idea about them, you can actually buy at these levels just to capture the really nice upside rally, right? Getting my point? So this is all about market cycles, right? So if I have to talk about that, yeah, I have told you about the Wyckoff theory. You must be aware. You know, when it comes to the Wyckoff theory, what we have is this, right? We have a period of what? We have a period of accumulation. So that is what is called as accumulation zones, followed by a rally, right? And then comes the third phase, which is the distribution, right? The order may not be in this way, right? You know, an accumulation zone may be followed by one more accumulation zone, right? And between them they might have a markup zone or a rally, right? So I'm just talking about the four phases, right? So here we have it, here we have the distribution zone followed by the correction, that is the markdown, followed by again accumulation. This is the ideal Wyckoff theory. So what does it tell? So this is what is called as the accumulation zone, right? This zone, this one, accumulation. This is where the smart money, the institutions start accumulating the stock, right? So this can be compared to a consolidation zone. This is actually a consolidation zone, and the first signs of the uptrend is, of course, the higher high, the higher low, and all of those things, right? You know, a bit of momentum, a bit of volume, and also one more thing these days, liquidative moves, right? So if you see liquidative moves on the downside, like so if we have, you know, a fake down in this case, and the shorters are badly affected, they are wiped out, right? Those who short the stock in these regions, just right, but just by seeing a fake down, they are wiped out, and then comes the rally, right? So this is all. This region is basically the accumulation zone, where we see institutional activity, and of course institutions, you know, initiate the fake outs and the fake downs. You might be aware of it, right? And as time passes, you know, the retailers are wiped out in the market. Either they are bored of the consolidation, or either they are wiped off by, you know, liquidation, right? Any of those two cases, and then the institutions start pushing up the prices, right? So here what we have is a nice push, right? So this is what we call as the markup phase, right? So we have the accumulation phase followed by the markup phase, right? Now again, this markup phase may be followed by one more consolidation, and that might result in one more uptrend, right? So that can be one more accumulation, re-accumulation zone. That is very possible, very much possible, right? But let's come to the third phase as discussed by the Wyckoff theory. So this is what we have as the distribution phase, right? Distribution. This is where institutions start selling, right? This is where institutions start selling their shares, right? Getting my point? So you might see some what? Lower low formation or lower high formation here, some bearish indication, right? Nice bearish candles maybe, or maybe fake outs, right? That is also a good sign. So all of those things, right? And what happens here? Again the prices start coming down. So this is the markdown phase, right? This is the markdown phase. Again, a markdown phase may be followed by a distribution phase, a redistribution phase, or maybe a accumulation phase. Getting my point? So this is how markets work, right? Markets work in cycles, right? So I have told you now about the Wyckoff theory, right? Getting my point? So this is Wyckoff theory. What we have here is accumulation zones, markup phase, markdown phase, distribution zones or distribution phase, right? We have four major phases in the market. Now let's analyze this Himadri specialty in this way. What has actually happened up here? So this is a fairly nice accumulation zone. You see higher low formation, you see higher high formation, you see some nice uptrend. Now the rally begins. So this is the markup phase, right? So this is the what? Markup phase, right? This is the markup phase. Now again, if I have to just write it here, this is the accumulation phase, right? This is the accumulation phase, this is the markup phase, and then comes the distribution phase. Here what happens, you see a nice fake out, right? You see a nice fake out, it tries to go up, it comes down quickly. So this is the first indication of a distribution phase. So here again we have distribution phase, right? So this is what is the distribution phase here. Now this is followed by the markdown phase, right? This is the markdown. So this is where the selling comes in, right? Now as you see, as the selling comes to an end, we have an equal dominance of the sellers and buyers, and here is again one more accumulation zone, or here in this case you can see this is a nice beautiful consolidation. Now you see momentum building up here, nice volume, nice candles, nice trend, right? Some signs of a reversal, right? So that's what shows the accumulation, right? This is the next accumulation phase by the institutions, and what seems as of now is the initiation of one more markup phase, right? So hope you are getting my point. This is how we understand the markets, right? So here actually you can plan out your investments, you can plan out your trades in a way that if you see the formation of a low, then you can basically enter somewhere here with a stop loss around here just to capture the up move. That can be a way of playing out this uptrend, or you may just invest some amount, right, based on the risk reward, right? In this case you have a higher risk reward because as you see this is a penny stock, right? So risk is fairly high. So in this case you will be putting in less quantity, right? Hope you are getting my point. That's how we like to understand the market cycles, right? So this is a very important concept you must be aware of, you must understand. This happens everywhere in every time frames, right? So this is really important for you to understand, right? Hope this video has been helpful to you. Hope that you will implement this concept in your day-to-day trading. See you guys in our next video.